Rupee, that's the big story. That's the big irritant. Rupee has plunged to a new low against the dollar. What's new about it? Well, the new thing is the percentage fall. It's a knock of 1% straight off at a time when commodity prices have corrected. There is weakness in dollar index. Rupee is at 56.85 and it's threatening to go below 57. So what is the root reason behind this sudden fall in rupee when global market conditions are likely stable? Let's discuss that and let's debate that with Mr. A.V. Rajwade, Forex and Treasury and Risk Management Consultant with A.V. Rajwade and Company. Mr. Rajwade, if I map the global environment, things are calm, things are stable, but there is a panic unwinding when it comes to rupee.
I mean, I never believed that it was the global scenario which had put downward pressure of the rupee. It is our own internal doing. The global situation is very convenient for our political masters, for them to blame on whatever is happening in India on Europe. But I think the reality is we need to do a lot more introspection. I think they have gone wrong on several occasions, and one of them is the exchange rate policy, which allowed wild fluctuations in the rupee, which in my view, an economy like ours, which mostly produces the so-called non-differentiated goods, which are very price sensitive goods, for that kind of an economy to have that kind of a policy, I think was completely wrong. We followed it for 3 or 4 years, and the gap today is extremely large on the current account, and capital flows are not coming in. And if you have 1 minute, one other point I would like to touch upon. Recently we had the GNP data for Q4, and I've been looking at the data. Now, as I'm sure you know, net exports is one of the components of GNP. And net exports during the first 3 quarters was a minus 170,000 crores of rupees each quarter. That is the average. Fourth quarter, it has suddenly become positive 50,000 crores. Now, I mean, it's a mystery, complete, total mystery as to how that number has changed when the trade numbers remain bad, trade deficit remains as poor as it was. Suddenly, how that net exports figure from negative 170,000 crores, it goes to positive 50,000 crores in Q4. And I'm totally mystified. If you redo the GDP numbers for that quarter, as I'm sure analysts elsewhere will do, at the average of the first 3, I think we have probably flat to 1% growth in that quarter. So I think it is things are getting worrying, and downward pressure will remain continue, as I have maintained for probably 1.5 or longer time, that only Reserve Bank and bank intervention will stop this slide, and there are obvious limitations to that.
Mr. Rajwade, so how much more weakness can we see? We're already on the brink of that 57 to the dollar mark. I mean, can we also see levels like 60 perhaps?
Well, I think maybe consistency is a virtue of the fool, but I have consistently maintained that I cannot predict levels, because there is no or very little correlation between what changes in fundamentals are and what the price reaction is. That's point number 1. Point number 2, of course, is that I don't think any one of us knows at what point of time there is a bank on its own or will be told to take a stand to stop this slide. Now, these are 2 major question marks, so I would not like to hazard a guess on the kind of level which we might see. But I expect the downward pressure to continue, and this is basically our doing within the country. I don't think what happens in the Europe. Now, Euro has strengthened, to my surprise, in the last 1 week. I think the last I had seen was 127 or something. But the rupee remains, and I think it will, because the problems are, Europe is not the cause of rupee. It is our own internal policies.